Yeah, I didn't see that show, but I read Kevin's biography. You can't make this shit up. I love that title. But he's like me though. He makes mistakes big and first time, and then he learns the hard way by getting scarred. I remember there was a part about his life where he just started breaking out. He got a show deal on I forgot what network, and it was for one season. Immediately he called his dad. He's like, "Dad, we rich." And then he started buying cars for everybody. And his dad bought a house, $50,000 house. Like everybody just started buying stuff. And I think by the time the season was over, his accountant's like, "You're broke, dude. You have nothing." And he said it was one of the most painful things in the world where he had to call his dad up. He's like, "Dad, you have to sell the house."
Yeah, yeah, it's tough, man. Like again, it's just a learning experience. Like everybody learns, got to work your way up there at one point. But yeah, it just depends who you're around, and that's why it's the best to have this good group of people around you.
Yeah, but it shows why he's like so smart with money now, right? Because if you made those mistakes and you realize how fleeting success and money could be.
Yeah, yeah.
You know,
The markets are the same thing, man. Like you and I know that better than anyone. That's why. Like, again, like I was just saying, like why don't I short it way up here? Like I wait until it comes down, and I wait till I know it's predictable because I know how quickly that money can go away. Like you can make $1,000 today. Tomorrow you could lose 10,000 if you're not careful. Like it's in and out so fast. Like that's why you just got to be really careful, and you got to have really strict rules. The same thing goes with business, right? Like you can't just be flying by the seat of your pants if you're running a business. Just like you're saying Kevin does there. Like you got to have rules, you got to have plans, you got to look at your numbers, check your balances, and you got to make sure everything's actually going to function properly. Because if you're just spending stuff around, people don't really realize that, and it's like maybe you don't realize it until you have money, sort of thing. But it doesn't even really work that way, because no matter what scale you're on, like let's say you're in high school, you're working a minimum wage job, and you get, I don't know what minimum wage is nowadays. Like let's say your biweekly paycheck is like, I don't know, $800 or something, or $700 after taxes.
I think it's $15 now,
Is it?
or almost, or that was the target. But it's somewhere near there now, I think.
Okay.
Let me look that up while you finish your thought.
Okay. So yeah. So like, let's just say for argument's sake, you're making, $800 every 2 weeks or whatever, working a 40-hour week. Like if that's your first job and you're 16, like that's a ton of money, right? You do that for 2 weeks, you got like, $1,600 in the bank. Like, that's insane. You've just worked for a month and you're like, wow, like I got $1,600. This is wild. And then, you go out with your buddies to, Niagara Falls or whatever, and you spend a few $100, and then like, you buy a bunch of food, you take a taxi somewhere, and then like you get back and, you're like, oh, I want to get a new bike, you buy a new bike. And then all of a sudden it's like, wow, I only have like $100 left. Like it just goes so fast, and it took you a month to make that much money, and you can blow it in a day easily. And it just scales up from there, right? Like, you look at Kevin Hart, it's like, oh yeah, we're rich now. So like, instead of going out to the movies and, he buys a house and he buys cars, and it's like, it just goes so fast. So it doesn't, that's why it's funny. Like when people look like, oh, so-and-so was a quarterback and made hundreds of millions of dollars. Like how could he possibly be broke? It's like, he can be broke pretty easily. Like it's not hard to lose that much money. Like, especially if you're living that kind of lifestyle.
But you know what's funny? So I was just talking with my boss at the kickboxing gym just the other day, and we both noticed something. Because we're in the market, and you'll probably agree too. Because we're in the market, we don't look at things in terms of dollar value. We look at it in percentages, because that's more important.
Yeah. Yeah,
right.
for sure.
And I think that's the big problem, because those football players are like, I got a $20 million contract, right? But if you actually look at their pay stub, their breakdown, I think something like 15% goes to their PR person, 10% goes to the lawyer, another 15-20% goes to their manager. After taxes, they're probably left with 20% of that 20 million. So it's like they have way less than they really think they do.
Yeah, yeah. Yeah, and then it's also a spending thing too, right? Like if you're looking at percentages, like let's say, after that you're taking in like $5 million or something like that. And then, or like let's say it's $4 million, and it's like, oh well, I want to buy this this Bugatti or something, or this like this really nice boat, and it's $1 million. It's like, oh, I got a $5 million contract, that's 25% of your net worth. Like that's way too much to be spending on a toy.
Well, I'll give you a funnier example. So the conversation started because his fiance bought some water for the business, and he was like saying she overpaid by $15. It was like a giant bunch of package. She overpaid $15. her answer was, well, it's just $15. He's like, no, it's 20% extra. You paid 20% extra. It's like if you made every purchase and you overpaid by $20 or 20%, we'd have nothing left.
Yeah. That's a great way to look at it. It's hard too, though, especially when you get in the market, because like as you grow, and like in anything, in real estate or stock investments or whatever, we've talked about this before. The loss side of that becomes harder, right? Because if you're used to, like, let's say I'm only risking 1% of my account on my trades, and I have $1,000 account, you're risking $100. But then if you grow up, you have a $1 million account, it's like, okay, now you're risking like what, 100,000 or whatever on a single trade, or 10,000 or whatever it is. It's like, that's going to be a lot. Like, it's difficult to look at it like that when you look at the dollar value, because it's like, okay, yeah, it's 1%, but like, that's a lot of money now.
I 100% agree. I noticed that at the start of the year, somewhere around February, I started changing my sizing, because I'm like, my portfolio is to the point where I realize, like, I think it's different for everybody, but it reaches a point where you realize it's not about trying to maximize risk to maximize gain. It's about trying to preserve capital, what you already have. And that switch flipped for me in February. I was like, holy shit, I need to protect this now.
Yeah. That's a huge thing that a lot of people don't realize in trading. Is that's why, we've said it a million times, you don't always have to trade. Like, there's not always going to be a trade there, right? So like, sometimes the best move you can make is just to not do anything and just, like you said, preserve that capital. Because if you're sitting there and it's like, okay, I know how to do this, I make this one trade, I make money. The next day, I make money. The next day, I make money. The next day, there's nothing there. Then, like, I need to save this, because if I screw up, I could blow the last 3 days, and then that's almost a week of profits gone. So sometimes you just got to sit there and just wait, because you can't just force trades. Like, the patterns and the charts, they do what they're going to do. So all we can do is sit there and watch, and just keep our fingers crossed that we see something that we know how to make money on. It's a lot harder said than done, though.
There's that famous saying, the markets can stay irrational longer than you can stay solvent.
Yeah.
And it's like, if you get into that period where you just can't for the life of you win a trade, how long before you lose everything?
Yeah, exactly. Yeah, that's why like slow times are really hard, right? Because like, if you're used to a crazy market like we've been having over the past year, and things slow right down, it's like, you get bored, and then that time frame goes on longer and longer and longer, and then all of a sudden you see, all of a sudden one stock moves and you get all excited, and it's like, 6 months ago that would have been like a C- setup that you wouldn't have even looked at, but because you haven't seen anything in so long, you're thinking, oh, this thing's perfect, right? And then you lose all your money because it's not actually a good setup.
I want to say, I think you're probably your approach to trading and your progression, I think, is probably the most sensible way, because I think if people put either too much money in the market or think the market is where they're going to make the majority of their income, that's going to lead to you making more emotional decisions. Whereas, like, if you've had a full-time job this whole time, and the trading's kind of on the side, so then, like, you don't have the urgency. It's like, I have to make this next trade to put dinner on the table. And so because you don't have that urgency, you could, be a little bit more choosy with your setups.
Yeah, and that's like, I mean, if you listen to anybody who's a full-time stock trader, that's what they all say. Like, like, I've listened to enough interviews with guys, and the general consensus from every single one of them is basically like, I was making the same as I do trading at my normal salary job for 2 years before I decided to retire, or like, switch over to doing it full-time, or like, I was making double what I was making for 3 years before I decided to try it full-time, or like, I paid off my house and I had no expenses, and I was also making my normal salary trading. So that's when I did, it's never just like, okay, like, I think I'm doing all right, let's just give it a shot and dive in there, because you can't have that stress, right? Like, these guys are like, okay, well, I've been doing this, kind of just, 20% of my focus, and I'm making the same as I am at my day job. So if I put 100% of my focus in, it's going to be, it's going to be a cakewalk, basically. But you can't just like, quit your job and just be like, okay, like, time to figure this out. Like, let's just sign up for some courses and learn how to do it, because then you're going to be stressed as hell. And if you're sitting there and 3 days go by and you haven't seen a trade, you're going to be freaking out, because you're thinking, oh my God, I'm not going to be able to put food on the table next week if I don't trade. And then you're going to trade, and then you're going to lose money, and it's going to stress you out even more. And then, it's a slippery slope.
Well, that's like the worst case scenario. But even if you've been trading on the side for, say, 3 years, and you're starting to get it, you start making the money, I think that's still not a good make the full switch yet, if you're wanting to do that, right? To let more time pass. Yeah.
Yeah, exactly. to have a lot of money in the bank. You want to be really good at it. Like it's not a quick thing. Like you got to be real comfortable in it.